For investors seeking a steady stream of cash, covered call ETFs look like a perfect solution. They offer exposure to reliable blue-chip stocks, combined with premium yields designed to provide downside protection. Today, we are auditing one of the most popular funds in this category, the Global X Dow 30 Covered Call ETF, trading under the ticker symbol DJIA. If you look up this fund on traditional rating platforms, you'll see grades based on subjective manager interviews and generic marketing categories. Those grades tell you how the fund fits into a category, but they don't show how the fund actually handles your capital. Robbit is a purely quantitative engine. It ignores marketing labels entirely, reverse engineering a fund's true risk profile by analyzing its daily price behavior. When Robbit ran its audit on the DJIA Covered Call ETF, the AI assigned it a bearish score of -7. The data suggests that the safe income narrative driving this fund is structurally flawed. To understand the score, we start with the climate, Robbit's macro-level analysis of the fund's strategic, long-term performance using end-of-day data. This chart compares projected returns of the actual DJIA fund against Robbit's optimized ETF, a simulated liquid asset basket. The green line shows DJIA projecting 25.53%, but the purple line, the ETF, projects 32.74%, representing a 7.21% efficiency gap. This red Robbit metrics table identifies the gap's source. Index 7 shows the DJIA fund lagged the optimized model by 7.21 percentage points over its lifetime. That deficit is the strategy's literal cost. Premium income doesn't compensate for the capital appreciation sacrificed. Over a long-term horizon, holding this fund means prioritizing monthly payouts at the expense of the portfolio's total growth potential. To find the mechanical flaw driving that performance gap, we shift from the long-term climate to the short-term weather. We use Robbit's intraday engine, Bullpig, to analyze 5-minute tick data. This teal Bullpig metrics table isolates how the fund captures momentum. Look at Index 3, maximum excess return. During market rallies, the unhedged optimized model outperforms the actual ETF by 12.60 points. This illustrates the upside cap. When the 30 underlying Dow stocks move higher, the covered call structure forces the ETF to hit a hard ceiling. It stops making money, while the unhedged stocks continue to climb. Because of that artificial ceiling, the AI's unhedged optimized model leaves the ETF behind by over 12% during these high-growth tactical windows. The DJIA ETF functions as an upside trap. Investors are paying management fees for a structure that mechanically cuts off their own gains. The alternative is Robbit's glassback solution, the Exchange-Traded Intelligent Fund, or ETF. The AI normalizes these complex option strategies into simple, static baskets of common assets. This pie chart shows how the AI replicates the macro DJIA style without using options at all. It uses a static allocation of 4 broad equity ETFs, 61 units of IWM, 16 of IYR, 15 of IWR, and 8 of XLF. To see what drives the fund's intraday price, we examine this tactical Bullpig pie chart. To match the fund's behavior, the AI ignores equities. The 100-unit basket is comprised entirely of treasury bonds, 48 units of TLH, 26 of TLT, and 26 of IEF. Because the covered call strategy removes so much equity volatility, this Dow 30 fund mathematically behaves like a bond portfolio. The metrics behind DJIA's -7 score reveal a consistent structural drag. The fund's mechanics cap your upside in bull runs without providing enough of a buffer during crashes to justify the trade-off. Investors have long paid a complexity tax to Wall Street, based on the assumption that exotic option strategies are more efficient than simple diversification. Robbit's technology clearly shows that these complex returns can be replicated and often improved upon using simple, transparent building blocks. You can move past the illusion of complexity. Visit robbit.ai to run your own AI diagnostics, download your static shopping lists, and take back control of your alpha.